Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, now we're going into the gold market. So here, as you could see, what has happened recently. So yesterday we just have talked in the morning about that gold market will become some asset of the breakout. So currently the trading should be based on some breakout just because of the overall environment that we have and because of the technical picture. The market stands tight and actually the action will be sharp, and the specific of the trading right now, the gold, is that you have to get some plan for a trading that will make it comfortable to you and profitable of the trading with the big swings, but you do not know what the direction will be. And yesterday we have offered you our approach that theoretically you could use, and indeed, as you can see, right yesterday in the evening on the JOLTS report, gold has jumped. Of course, we haven't expected that it will be on the JOLTS report. Usually it is mostly just ignoring by the markets because it's very close to the expected levels as a rule. But yesterday was a different story, and although we were waiting for rally and action on some turmoil around the central bank meetings, Fed, the European Central Bank, late on possible debt sale problems, but it has happened earlier, and our market shows the upward action. Now, by taking a look at the daily chart, could we say that bearish context totally cancelled? Of course not. Despite the strong upward action, here market shows the pullback after the downward action. Trend remains bearish. Market now is flirting with the MACD predictor, and by the end of the day, as you understand, today will be the long session. We could get, for example, the grabber, and in general, overall situation might be different, especially if Jerome Powell will tell something hawkish, although this is not very probable, especially as now he already stands under pressure on the political power. So the Democrats asked Jerome Powell, you probably heard about it, to not rise the rate. It's just because it hurt the banking system and crushed the United States economy. How he will respond, whether he will respond, it's difficult to say, but the moment that politicians are all intruding in the financial sphere, it is, well, always smells not really good. So all this stuff just tells us that by the end of the session everything could change. And here on the daily chart we can't say that bearish context totally excluded. So at this point it's still valid. Still, if you take a look at the 4-time frame chart, despite the points where we have taken position, whether you have possessed yourself yesterday at these lows, as we said, inside of the triangle, try to take position as close to the bottom as possible if you'd like to buy, and use the buy order right there on the breakout. So as this position, especially this position now stands in a good result. So maybe if you have entered right on this point, maybe it makes sense to close it and try to re-enter on some better price, because now it's somewhere around your break-even, or you just could manage your position as you would like to. Still, with this current performance, market hits near standing resistance 2018 area, and this is also minor butterfly inside of this triangle, also hits the 127 extension. So action was relatively strong. It means that after pullback, the pulse now is controlling the situation, and market has chance to proceed high to the next standing levels. Here's a really big amount of different targets. So you could use the next butterfly target 2030. You could use a slightly greater butterfly here with the same targets, using extension. All of them will be right in this area. And finally, you could use initial butterfly with these spikes down and up on extension. It will be very close to the next target 2040 XOP. So you could calculate it by yourself. Here I just keep valid major XOP from this initial ABCD pattern, which stands around 2041. So that's approximately the target gold could achieve. Now, if you have the bullish position, or you would like to take it and you haven't taken it not in the breakout, not at the bottom yesterday, you could need to just watch for a retracement. The major task here is to avoid the price drop back in the triangle. If this will happen, the bullish position immediately starts losing the attractiveness. So bearish risks will start growing. That's why in the current point, in the hourly chart, I would consider just two levels for position taking. First one is 20.06, right there, stands right at the trend line of the triangle, and maybe the confidence around 97 and millennium level. So as you can see, these two levels is more or less acceptable. This one will be too low, because in this case, market will drop it. It has to totally erase this rally. We do not want to see it. Preferably if market stops right there around 20.05, 20.06 area. But if it will drop to the 1998, 20 even, it will be okay. So this confidence more or less acceptable. So well around standard triangle line, so we could probably treat it as a single support consolidation that is theoretically suitable for the bullish position taking. Downside breakout will be bad for the bullish short-term context. That's what we have currently. On the bearish side, I do not see lots of things to do. It's just because you do not want to sell against this prediction with the total uncertainty what will happen on the Fed meeting. If today we get some return right back down and we get bearish grabber on the daily chart, that might be a different story. In this case, we could return back to discussion of the bearish context tomorrow. But for now, as on the euro currency, as on the gold market, I think that short-term context remains bullish, and I would consider only bullish position taking. If, of course, do not take in consideration total uncertainty about Fed meeting, what will be said. This the risk from the Fed is a different story. So that's what we have on the technical side. Let's see how the session will be completed.